Welcome to the WTR Small-Cap Spotlight Podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In this special podcast episode, I'm honored to be joined by Jeff Karcher, Global Managing Director of the Texas Stock Exchange, also known as TXSE. I have personally been fascinated for several quarters reading about and watching the groundwork being laid for the 2026 launch of TXSE. So much so, in fact, that I've even reposted a few TXSE stories on LinkedIn. Jeff has an incredibly relevant background for his TXSE role, which I'll ask him to cover in a moment. But first, thanks, Jeff, for joining me and taking time out of your busy schedule this morning.
Well, thank you very much. I appreciate you asking, and allow us to talk about what efforts are underway here.
Great. First off, Jeff, congratulations on the major strides already made in setting the stage to launch TXSE in 2026. Before we discuss what lies ahead, please tell our audience about your professional background that led you to TXSE.
Sure. Well, I spent a good deal of years in the really kind of more the sell side equity field. So I began in sales, moved into research, product development kind of roles over a variety, couple of firms, and spent the last 33 years in Atlanta until just this past year when I actually relocated as part of the executive team relocating to Dallas. And I'm now a full-blooded Texan, which I never thought I would be in my life. And throughout the course of my career, the different roles that I kind of took within that institutional world really just involved just kind of change. I mean, for me, I just saw a lot of complacency in the way the business was being done, a lot of redundancy, a lot of commoditization. And so kind of I always was very curious to try to come up with better, different ways to do the same business that we had always been doing. And that, generally speaking, is kind of what attracted me to TXSE here, which is another way we pronounce it, in addition to TXSE. The TXSE is that, the listings business is and has been a very, very, I don't know, you could argue commoditized, but very, very kind of steady and kind of complacent business in our view. And we see an opportunity for change.
Excellent. Thanks for that overview, Jeff. Now, moving along, let's discuss TXSE's launch strategy and timeline. Please walk us through the key milestones leading up to the 2026 launch, including regulatory approvals and the expected timing for the first listings to occur.
Sure. Take a quick step back in the sense of how we kind of came about. In 2020, New York and New Jersey tax authorities kind of had proposed a transactions tax in the city. And at that time, the NYSE and NASDAQ both had reached out to Governor Abbott in Texas saying, hey, this is not necessarily a good thing for our industry. If this does in fact go through, would we have the ability to relocate a lot of our efforts to Texas, which he obviously said, sure, we absolutely could. Tax kind of went away, but it still kind of put the little kernel in his mind of having a Texas stock exchange in Texas itself. And so for a few years, Jim Lee, our founder, had been kind of percolating the idea, talking to investors, talking to industry personnel about the possibility of that. And the realization became pretty quick. This could be a real opportunity because the whole backdrop of Dallas and Texas is financial services has grown significantly in the region. The Texas economy has grown significantly in the region. And so that's really kind of got it going full bore. It's been just about a year, which is kind of hard to believe for me being on board here. And we've done a lot of kind of just building the infrastructure and the foundation of just being a company. And part of that is also building the exchange too. And so we filed our Form 1 back at the end of January. It went public early March, I believe it was. Comment period has ended at this point, and we fully expect to have that approval by the end of September, which would be the typical and traditional timeline for an approval for an exchange. And then at the end of September, hopefully when that occurs, we will start to begin all the steps needed to take to go live. So that's connecting clients, connecting desks, and just establishing the protocols, the testing that needs to go on for the physical exchange itself, where the actual trading will take place. And that should begin in the middle part of February, perhaps. And then from there, ETF listings would start to begin kind of the mid-late May timeframe. And then corporate listings, which is the primary role that I'm involved in, we should begin 12-ish or so months from today.
Very exciting. I will say as an aside, I was amazed the other day. I read somewhere that 10% of all publicly traded companies in the US are headquartered in Texas, which is remarkable. So Texas has become a major hub for finance and tech, rivaling New York City. And Texas's pro-business environment is certainly starting to go up against Delaware for corporate registrations. Can you elaborate on this and frame how TXSE fits into that picture?
Yeah, sure. Well, that's effectively kind of two questions, really, and kind of two backdrops, really. One of the things I kind of come to realization of being on board here and just thinking about everything is just finance, and for that matter, really the economy, if you think about it, has become very decentralized. If you think about finance, the advances, the companies you're seeing, the new technologies, you're seeing an Allies, a national bank with no branches. You see Plaid, Stripe, Robinhood, et cetera. All are companies that are prospering well without having to be any kind of a centralized or in-person kind of presence. And I think Texas and Dallas offers just that as it relates to exchanges in the sense of listing exchanges too, because that is two different types of exchanges. The corporate registrations is kind of a key component, but really separate from what we're doing in the exchange world. That's something the Texas legislature took a hand to really 3 years ago, but established the Texas Business Court 2 years ago. And that's really the kind of the foundational layer, very similar to the Delaware Chancery Court, but with the Texas rules and guidelines and codes that they're installing, which, one would say are business friendly, but really kind of, I think the intent there is just to create very predictable guidelines and guardrails within the legal community, which then can translate to the listing community. So we were intimately involved working with the legislature in getting those laws passed. They did pass this past May, and our law in the state of Texas as it is. And there's a few of them that would directly impact the companies in a very positive manner. But that speaks to really kind of the true backdrop of Texas and the administration in Austin, but also the business community in Dallas, is just to really kind of get out of business's way, set very rigid and very strong guardrails, but get out of the way and let people make their widgets better, cheaper, faster in their own right.
That should be music to corporate issuers' ears. I understand that TXSE is planning to be fully electronic and headquartered in Dallas. What advantages will that bring over NYSE's and NASDAQ's existing infrastructures?
Well, it's a good question. To a great degree, absolutely nothing. Yeah. And I say that somewhat tongue in cheek because, a corporate listing is a very, very important thing for a large public corporation. It has to work perfectly. It has to be very seamless. It has to be very smooth. It has to be without hiccup. And so from our responsibility of being a listing exchange, we want to do to a great degree exactly what the NYSE and NASDAQ are doing, which in the listings world, they do a pretty good job. It's not necessarily that something is broken, but it definitely can be improved and fixed a little. And that's what we're going to be, looking for ways and opportunities to do it. We are authentic. We are Texas. We are made from a lot of native Texans, but a lot of the business community, our investors speak very strongly towards having very strong Texas roots. That's what the kind of the foundation and kind of the building that we have in terms of the money raised. It was very strategic in nature. Almost 70% of which of the funds that have been raised were raised by family offices, predominantly out of the Texas region. And there's a lot of enthusiasm in this state and in this city to get this up running and making it work well. And then at the same time, bringing some innovation to the landscape for it, both on the trading side of things as well as on the listing side of things. If you think about the trading standpoint and how we can be different, we'll be a lower cost entity. I mean, being a startup and building it from the bottom up, we don't have layers of bureaucracy and a whole lot of excess costs. It is world-class technology. In fact, there's a very good kind of analogy Jim likes to use. There's 7 or 8 people in the world that know how to code a matching engine. We have 3 of them. Okay. And we were fortunate to procure them early on in the process, and they were some of the leading designers back in the 90s when electronic exchanges first started up. And so they know how to do it, and they've done it for us. In fact, that exchange has been built already. It was done 5 months ahead of schedule because they had the expertise in doing it. We partnered with Dell to provide us servers that are the fastest machines they've ever launched. So you combine that software engineering expertise on top of that hardware platform, and we're going to operate at a very, very high level of throughput and efficiency and very, very low latency, as good or better than the existing exchanges out there. And we could do it at a lower cost. So that would be one way on the trading side of things. On the listing side of things, we understand corporate concerns that they have with being public. I mean, it can be kind of a pain and onerous burdens of reporting standards that could be more standardized, but really kind of become more predictable. So the way we're looking at listing and building out what will be a listing platform for a company is we will be very aligned with the company itself and what they have to do for their reporting for being a public company. And if there's opportunities to improve that reporting standard or the type of standard or some of the legal barriers to being public and related costs to being public, we're going to address them. And I think the legislative advances that took place speak very, very strongly to that. They will be game changers. They really will for companies as they look and learn about them and what they can provide to them while still staying under the very strong umbrella of the SEC. It is innovation that we're bringing, and we'll be bringing more that'll kind of come to the table and be more public with it early part of next year.
I'm excited to actually see the details when they do become available. If we peel the onion layer back a little further on what you just said, what new listing criteria are likely to be implemented by TXSE, such as earnings test and minimum price thresholds that might differentiate TXSE from NASDAQ and NYSE? And if I ask it perhaps in a different light or frame it differently, will listing requirements be more stringent than other exchanges?
Sure. So if you were to look at the Form 1, which has our initial listing standards posted in it, we will be very similar to the NYSE and NASDAQ with very little differentiation at this point, as the approval process is something that we want to make sure we get past. We are looking at possible amendments to that post-approval that could allow us to provide perhaps some opportunity for a little bit more of an open path for companies to come public. It's a very important desire by not just us, by really everyone. You want to see more companies come public. The earnings test you mentioned, no, that's one thing. Sure, what if that earnings test was modified a little bit to make it a little bit easier earlier, perhaps, for a company to come public that's accelerating its growth very, very quickly, which historically hasn't been the case. Historically, companies would take years to reach, say, $100 million in revenues. Today we can see that happen in 9 months with some companies. So yet the corporate initial listing standards really have never adjusted to kind of accommodate that. So we're going to take a look at that and see if there's opportunity to improve that. And if you say more stringent, it's kind of two different ways, I would say, because you have initial listing standards and you have continued listing standards. So for us, as we get up and running, we will want to recruit and attract companies that are already existed listings. So they would be subject to our initial listing standards, but yet they're operating on continued listing standards. So if you put the two together, there's almost 1,700 companies today that are public that would not qualify to list on the Texas Stock Exchange. So one could take that statement and say, gosh, you're more stringent. Perhaps, but it's really more a differential between initial and continuous standards. We plan on keeping a very strong hand on that and making sure we kind of follow through.
Your comment that you made a moment ago that you could potentially truncate the period of time it takes to bring companies public, I think will certainly be music to investors' ears, given the dearth of IPOs over the last few years. So anything that helps will be applauded. So with an initial fundraise of approximately 160 million raised from such reputable institutions as BlackRock, Citadel, and Charles Schwab, and the likelihood for additional fundraising ahead, what resources and credibility does that bring to TXSE's rollout?
Sure. Well, I think the competitive response so far, I think, kind of answers that one already in a way for you. There's been quite a bit of activity for their standpoint and their focus, which is great. But for us, BlackRock, Citadel, and Charles Schwab represent the largest investor in the world, the largest retail firm in the world, and the largest trading firm in the world. And I think that speaks volumes for us and the trust that they have in us, and also to the opportunity that they see. While I don't want to speak for them. I think they really kind of see an opportunity for improvement in the landscape. So despite the fact there's already, a dozen plus exchanges out there, for them to support one like us starting up, I think that really kind of shows that we can look at things a little bit more holistically than just a trading platform. We can be bringing new products to market, very similar to the NYSE and to NASDAQ and to CBOE as well too. But when you have, such strong backers like that, it really gives us a lot of confidence for one, but also two, a lot of support behind the scenes. Their advisors, our board is consisting of overseers from each one of those entities, along with a whole host of other industry experts that have a great deal of experience at the SEC. We have 2 ex-commissioners, 2 former heads of tradings and markets on board, a former governor in Texas, a former Fed Reserve president. We have a ton of very, very knowledgeable and successful people helping guide us kind of through. The rest of that money too, those are kind of the 3 headliners, but I think, as I mentioned earlier, almost 70% is from family offices. And that was very strategic too, because if you think about how a family office invests, they invest generationally, not transactionally.
Right.
So we have the luxury of building this business from the ground up with not a 5-year put on a fund that needs to be pushed out, that we have to hit certain targets. We're doing things the right way. We're doing things for the long term, and the success of this entity is going to be really kind of found well past my time being here.
Those are really good points. And I'll say kind of extemporaneously, not unlike Citadel moving from Chicago to Miami, I am relocating to Miami this weekend. And I agree, Citadel is a powerhouse. What does TXSE offer that would make a company want to use your platform for an IPO, dual listing, or even more so to motivate them to move their primary listing from another exchange, Jeff?
Sure. Well, as I mentioned, a good deal of what we will be offering from a corporate listing standpoint is still to be discussed at a later date when that is kind of more ready for prime time. But today, right now, I think of the very significant attraction and interest for any company, I think, is they should really look at the Texas legal landscape and the changes that were made. As I mentioned earlier, they are significant. I believe they will be game changing. But there are some requirements for it. And the requirements basically dictate that a company has to be either headquartered in Texas or incorporated in Texas and listed on a national securities exchange headquartered in Texas. Like, I put some emphasis on the and, the or, and the headquartered, in that, because it is that combination that allows that company then, as a public company, to be subject to a few different components to operating on a public basis. The most notable was what's called the business judgment rule. Simply, that's kind of codifying very, very simply for a director and officer of a company, if they are acting in the shareholders' interest, making their business judgment decision for a company, they cannot be sued in a derivative manner. You would have to have and prove intent to deceit, illegal behavior, intentional manipulation in order to bring a derivative suit. There's also some more stringent books of records requests, board independency opportunities for a company, really kind of things that just make their life a little bit, I don't want to say more simple, but it's just they can make those decisions without having the armchair quarterback looking over their shoulder, knowing that, well, should we take this risk or not take this risk? In my business judgment as a leader of this company and very experienced in the industry, I think we should do this. They can do so knowing that there won't be that derivative legal exposure down the road. Obviously, they don't all work out. And decisions that are made are not always good ones, but that doesn't mean they were done with malicious intent, which has been the subject for a number of companies throughout the country that have been subject to other states' and corporation laws that really kind of probably stretch things a little bit too far. As a result, you would think their operating costs would be lower. It's lowered cost to incorporate in Texas. Their D&O insurance should be lower because the legal liability would not be as onerous as the past. So those are true and very large operating costs for a company that are really kind of buried within the overhead that they really kind of don't see. There was a company that was based here in Texas that went private a couple of years ago, and immediately their overhead costs went down 20%. That's not right. That shouldn't be the case. It shouldn't be that expensive just to be public, and we saw an opportunity there with that rule to be able to help mitigate that component. The second one is the proxy threshold rule. So if you had those same characteristics of incorporation and listing, you'd be subject to proxy threshold rules, which are slightly different than the SEC's proxy threshold rules, which suggest that you would have to have $2,000 of stock owned in order to bring a proxy proposal. In Texas now, under those rules, you have to have $1 million of stock owned 6 months prior to the proxy season, own it through the proxy season, and bring 67% of the shareholders supporting that proxy before it would be submitted. So what that does is it still allows a pathway for proxies to be brought to a company, but obviously is going to most likely really kind of weed out a lot of the very extraneous ones that really don't pertain to the business itself, that companies really struggle with having to address the reporting requests or needs that somebody brings with those, but yet still allows that pathway to be brought to the company. And it's most likely it's going to be something pretty significant and pretty strong and probably a pretty good idea for the company. So that makes their day-to-day operating, profile, just a bit more manageable. So I think those are going to be things that companies are really should take a look at and see if that aligns with their desires and their needs and their problems to have, because it can be done fairly easily. And that's going to be, I think, a big attraction to the Texas marketplace. In addition, we will be building out an exchange. We will have a physical building. We will have event space. We will have a bell. We think it's a bell. We don't know. We're taking suggestions. We could do something different. If your listeners here have any good suggestions, we've had a cowbell brought up. We've had a dinner bell brought up. We've even had some other little bit more out of the realm of reason, I think, suggestions brought up too. But so for a company listing with us, they're going to get a great deal of exposure. They're going to get a social media program. They'll have a marketing campaign that we'll be building around. It will be part of the Texas community. And if Texas is an area where they have business themselves and want to grow their business, it will be an opportunity to really enhance the visibility within the state.
Great. Perhaps instead of the bell, you could have an Alamo cannon, much like the band AC/DC ends every concert in stadiums. But as a former sell-side analyst, I've had a lot of respect over the years for NYSE and NASDAQ. However, that having been said, I would be remiss if I didn't point out that Texas' planned launch has created concern with other exchanges, as evidenced by NYSE launching NYSE Texas and NASDAQ launching a Dallas HQ. Any thoughts or observations to share there, Jeff?
Sure. Well, we're flattered by the response and welcome the competition. I think the response really does one very, very big thing. I think it really proves the credibility of the idea that we had to have an exchange here, to have as an alternative to New York, another option for companies to consider. I think had they not made those changes, we would have had a little bit more difficult road to prove to a company that, yes, it is in fact okay to be listed in Texas. Again, back to my decentralization comment at the beginning. It's something that's going to take time for people to kind of come around and realize that, yeah, it can work. Today's technology certainly allows for that to happen. So competition makes athletes better. Competition makes businesses better.
Totally agreed. Wrapping up, Jeff, at a high level, what are the biggest risks and roadblocks TXSE faces in establishing credibility and gaining market share from entrenched exchanges?
Inertia. Just inertia. There really is, if you think about it, it's very little movement between exchanges in time. Now, there has been an increasing amount of movement over the last few years from NASDAQ to the NYSE, NYSE to NASDAQ, back and forth. But it's still fairly much thought of as something that, hey, you know what, it's not broken. I don't need to fix it. I got enough on my plate to kind of, keep me more than busy. I don't need to add something. But the reality is it's not a difficult transition. It is a transition that works quite easily. If you look at the data, when companies have transferred from one exchange to the other, their trading's fine. It's the same. It really doesn't have any kind of material difference. The data just does not suggest that. And so as more and more companies, I think, kind of start to see that and become familiar with it, it can work for them. And that part of that is really a function of just the way the trading landscape has changed over the last 20 years since Reg NMS went in 2005. Back in the early 2000s, 90-ish% or so roughly of the trading of a company listed on either exchange occurred on that exchange. Today, that number has dwindled down to the single digits in many cases for a lot of companies. So therefore, the importance of that primary exchange, matching and aligning with that company for their trading really just doesn't hold water anymore. I mean, trading once things open up after the open and right before the close, trading occurs over 200 venues throughout the world. And so the majority of that market share, the majority of the trading isn't done on the exchange. That should allow for a third listing venue having the opportunity to be able to host companies with very strong trading efficiency and provide them other benefits and different kind of philosophies that the company might want to be able to align with. And also having a third too just brings innovation. Like I said, we're going to be doing some innovative things with companies going forward. I would imagine even at the beginning, we're not done. It'll be something that'll be constantly evolving. We'll be constantly having discussions with companies as to how they can be a better public company and taking that feedback and working towards making some changes in the marketplace. I think, it's a duopoly, between NYSE and NASDAQ. And, in some of the talks I've given so far, I asked the audience, I said, name me a duopoly. And if you think about it, you can't, even though it was probably, Econ 101, Chapter 2, when you were taught what the definition of a duopoly was. I mean, the world just really doesn't form in a capitalistic society into duopolies. Why? Because of competition. And competition is innovation. But yet the listings business is a duopoly and been a duopoly in place for 50 years, however many years you kind of really want to count it. It goes back as just that. And, we aim to make that change by, like I say, bringing the innovation and, hopefully, providing a very, very credible third party and third platform for companies to decide what they feel the most comfortable with.
Those are really, really helpful insights. Thank you for joining us today, Jeff Karcher, Global Managing Director of the Texas Stock Exchange, and best wishes for a successful 2026 exchange launch. Also, a special thanks to the WTR producer and editor of the podcast, Joe Brunetto. Thank you for listening, and don't forget to subscribe as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcast, fireside chats, and conference schedules. We'll see you next time for another edition of the WTR Small Cap Spotlight Podcast.
Thank you, Tim.